morning and welcome everyone to the Moneycontrol live stream. You're watching the opening bell. I'm your host Nickey Mirchandani. Well, markets look set for a muted start on Wednesday. Trends in SGX Nifty right now indicate a somewhat flattish to positive opening coming in for the broader index. Wall Street has closed sharply on Tuesday ahead of Fed's two-day policy meeting conclusion. Overall, the consensus estimate is that there is going to be a 25 basis point hike to the policy raise. At this point of time, Asian shares stage a cautious bounce back, and the Yellen has vowed to safeguard a US bank deposit and may need more interventions coming ahead. In terms of FIIs, we've been looking at the selling now extending for 9th consecutive session. FIIs have sold shares worth around 1,454 crore. And in terms of DIIs, they've been buying to an extent of little less than 2,000 odd crore. But with that, let us get going and discuss some stocks and strategies today with Rajesh Palviya, who is the head technical research at Axis Securities. Good morning there.
Yeah, good morning, Nickey.
All right, you think a decisive move above that hurdle of around 17,200 level is likely to bring a sharp upside momentum for the Nifty in the near term?
So in previous trading session, it was a positive move, and throughout the session, we have seen Nifty has shown short covering action, and Nifty managed to close almost near to 17,100 level. So looking at the data setup, 16,900 put writers have confirmed that for these weekly expiry, at least this momentum is likely to continue further higher. So as of now, we are expecting range of 16,900 to 17,200. This could be the possible range we can see in the market. As we have seen the technical setup also, in last 3-4 trading sessions, 16,900 has acted as a good support area, and Nifty managed to close always above 16,900 level. So at this moment, we are expecting that some more pullback we can see in the today's session also. 17,150 to 17,200 could be the possible up move we can see in the today's session also. Though 17,200, 300 call writers are still there in the system, the major short covering will come only above 17,300 level. If at all Nifty crosses these level before this March expiry, then possibly one round of short covering action we can see in the market. But as of now, we can see a range of 17,000 to 17,250 for rest of this March series. So one can remain long with stop loss of 17,020 could be your stop loss at this juncture.
All right, go along with 17,020 as the stop loss. But with Bank Nifty, you think Bank Nifty has given a consolidation breakout on the daily chart? If yes, what levels can be expected here on?
Yeah, so Bank Nifty has shown strength in the previous trading session, and looking at the overall setup, we believe that if Bank Nifty continues to trade above 39,500, then possibly Bank Nifty can scale up further higher from the current level. Some short covering was there in the previous trading session. Call writers have covered their position for 39,500 strike, and put writers have added their position at 39,000. Even 39,200 strike, so which clearly shows that base is shifting higher, and if it's trades above 39,500, then another round of short covering we can see in the market. The immediate resistance for Bank Nifty is at 40,000. If at all Bank Nifty crosses this 40,000 level in today's session, then we can expect another rally towards 40,300 to 40,400, which is the next immediate hurdle for the Bank Nifty. So one can remain long in the Bank Nifty. Now stop loss on the higher side towards 39,300, and hold your long position for upside target of 40,000. And if it crosses those levels, then 40,200 could be the next target for Bank Nifty also.
All right, Rajesh, also could you give us 3 top stock ideas which could be a profitable bet coming in for the viewers and the traders out there?
So first stock is from OMC, that is BPCL. It's a 4th consecutive week where we are seeing that sustained buying action is happening in the BPCL, and now in this process BPCL managed to give breakout above its previous swing high. Looking at the overall setup, we believe that BPCL can continue its upward momentum towards 375 to 385. One can buy BPCL with stop loss of 352. Another stock which we like, that is from the chemical space, that is SRF. In the previous trading session, stock has shown good buying interest, and almost it's now negotiating with its 200-day moving average. Long built-up was there in SRF. Looking at the overall setup, we believe that SRF can continue its up move, and upside target we can expect in the near term towards 2400 to 2450. One can buy SRF with stop loss of 2300. And third stock is from capital goods. The capital goods sector is showing strength, and most of the stocks are showing strength. From that space, we like ABB. Stock is now negotiating with its multiple resistance zone in the previous trading session, and looking at the overall setup for ABB, we believe that this stock can scale up further higher towards 3500 to 3550. So one can buy ABB with stop loss of 3330.
Right, Rajesh, those are clearly the three bets out there: BPCL, SRF and ABB. That's the buying call coming in for these three. But let's quickly address the top movers of the day. In bunch of stocks that we'll be addressing this morning includes the like of something like in Hindustan Zinc, Vedanta, Tata Motors and life insurance companies, amongst others. Now, do remember for Hindustan Zinc per se, the company has declared in their fourth interim dividend to an extent of rupees 26 per share. And with this, the total dividend for the for FY22 to 23 thus far stands at around 75.5 per share. Do remember the fact that Vedanta holds an 64.9% stake in Hindustan Zinc, and with this, Vedanta will receive a corpus of around 7,125 odd crore. Now, this is a development which is typically not done well or gone down well with most of the brokerages around. Talk about the City, talk about Investec. Both of them, they kind of have a very bleak outlook coming in on those one. Investec has downgraded Hindustan Zinc and Vedanta. Vedanta typically to sell from hold, and the target price of around 220 per share. It has retained that sell rating on Hindustan Zinc, but has reduced the target price to rupees 270 per share. Now, do remember that Hindustan Zinc is already trading around that, about that 300 levels. So that's a significant revision coming in on the target price. It says that the Hindustan Zinc bumper payout could be the last, because the walls right now, they've been running dry. Likewise, even for Vedanta, except for one-time bump on the GR to RE approvals, that's the retained earnings approval. They also see a cash flow math suggesting that the retained earnings have been running dry for both Vedanta as well as Hindustan Zinc for the entire financial year. What we have in the list, second one is an attractive one, Tata Motors. That's going to be finally implementing a price hike on the commercial vehicle segment. The price hike is to an extent of around 5% and that should be implemented from April 1st, 2023. Also, what we're tracking this morning is Emami. The board is expected to meet on March 24th to consider a buyback proposal coming in on that one. The stock yesterday was up and about by 0.5% odd gains. In terms of the other counter that we'll be tracking this morning, Bandhan Bank, it's received a binding bid of around 369 odd crore for the entire written off portfolio worth 2,614 odd crore. Now, they have received a bid to an extent of 370 crore for banking units NPA of around 2,316 crore. It has received bids for transfer of loans to ARC, which will go for bidding for these assets under Swiss challenge method. Also, what we have interesting this morning is the entire report which is coming on the life insurance company. CLSA has come out with a report where they have upgraded slew of counters. Now, right from the budget to this date, life insurance companies have witnessed significant correction. What CLSA has done in today's note, in the morning note, they've upgraded HDFC Life to underperform from sell rating. It's raised the target price to rupees 500 from 460 per share. So that's a significant amount of upside there, right? They've also upgraded Max Life Insurance now to buy from underperform. That's almost a double rating jump coming in on that one. The target is to an extent of around 780 per share, and they've maintained also the outperform rating for ICICI Prudential with a target price of around 485 per share. However, they've maintained that the near-term growth, that is at least for the first year, the first half of FY24, that could see some amount of impact from the pre-buying in Feb and March 2023. Also, they've maintained that insurance at this time of point of time are preparing for mitigating growth factors. They see small possibility of long-term capital gains, which reduces the IIR impact to 30 basis point, but that could be reversed. The huge reversal coming in for large part of budget negative. So that's clearly some amount of optimism coming out there for the insurer companies. Remains to be seen how do they react in the entire trading session today. But I'm going to toss it back to Rajesh and ask his view, typically for Hindustan Zinc and Vedanta. Rajesh, can you just unmute yourself?
Yeah, sorry. So Hindustan Zinc was traveling in, downsloping channel since last couple of weeks, and looking at the overall setup now, stock has taken the support from its 200-day moving average, which was at around 300 level. So looking at the overall setup, stock is in downtrend, but we have seen some recovery from lower low. So 300 is the immediate support area. If stocks manages to hold these level, then possibly some pullback action we can see towards 340 to 345 level on the higher side. So those who are already holding the position can keep now stop loss at around 300 level and hold your long position. And if it comes around 340 level, one can book profits also. If we analyze the Vedanta is consolidating since last 7-8 trading sessions. So if we analyze the near-term setup, stock is having range of 270 to 290.
Sure, Rajesh.
This is the range which we are seeing since last 7-8 trading session. And looking at the overall setup, if we stocks crosses above 295, then stock can scale up further higher towards 305 to 310.
All right, Rajesh, we'll quickly address the market opening and come back to you and discuss more on Vedanta. But let's see how the market is stacked up for us right now this morning. Nifty 50, we're looking at 17,170 levels. So clearly, it is comfortably sitting about that 17,150 mark, and with gains of around 0.4%. In terms of Bank Nifty, we're looking at gains to an extent of 0.3%. About that 40,000 odd mark, so some support is being lent, or the relief rally rather has continued for Indian equity markets. The second consecutive session. Mid cap, we're seeing gains to an extent of 0.4%, and in terms of small cap, we're also witnessing gains to an amount of 0.5%. So some amount of outperformance coming in from the small cap index per se. Sectoral index, well, Nifty metal out there. 0.5% on this one. It's been doing well on opening basis for the last 4 consecutive sessions. There has been the entire China reopening, script playing out, which has been doing well for the Nifty Metal Index. The economy seems to be picking up, and also, if you talk about the Nifty IT Index, that's the one with the probably the the gains coming in to an extent of more than 1% on this one. And in terms of Nifty Auto, we are also seeing gains coming in to an extent of 0.5% out there. So clearly, even the auto index, there is some participation being seen on that one. In terms of the FMCG index, well, that's somewhat flattish to positive bias coming in on that one, right? Remains to be seen how the FMCG basket stacks up. But pharma index, another defensive name, barring IT, is the pharma and the FMCG index, which typically aren't doing too well in trade today. Losses with 0.2% out there in terms of Nifty Realty, which was the top gainer in yesterday's session, at least on the opening deals. We're seeing gains coming in to an extent of 0.5%. In Nifty Infra also, for that matter. If you talk about the market breadth right now, just to understand how well distributed we are towards that, is something that, we'd also be watching out for. But right now, clearly the momentum that we're seeing is building up for the IT, metal, banking space per se. And we're seeing FMCG, the defensive packs, rather not doing too well in trade today. In terms of advances and declines, 40 advances as compared to 9 declines on the index right now. So clearly the market breadth also is in the favor of advances. If we could pull out the top gainers and the top losers on the Nifty 50 index, needs to be seen how that is stacking up. HCL Tech, because IT index has been the top performer in today's trade, we're seeing gains there. Bajaj Finance, Tata Motors, of course, the price high coming in for that one, right? That's also the stock that we indicated right in the opening trade setup. UPL, TCS and Infosys, these are also doing well in trade today. Hindustan Bank, Tech Mahindra, and Tata Consumer Products. These are some of the other top gainers that we have on our list today. And in terms of the top losers, we have something in the likes of BPCL, Coal India, Asian Paints, which have been doing rather down and out to trade today. In terms of the other losers that we have today is Britannia, Powergrid and Cipla for that matter. And also if you could look at some of the life insurance companies out there and also the performance coming in for Hindustan Zinc and Vedanta, because there was a downgrade report coming in for Hindustan Zinc and Vedanta early this morning. There's a fourth dividend declaration announcement which has come through. So let's actually check out the performance coming in even for those counters. Hindustan Zinc, well, it's a flattest trade out there for this one. In terms of Vedanta, that is something also that needs to be watched out for. There's a downgrade coming in by Investec. So at this point of time, it's holding up. The fourth dividend declaration announcement probably has done well. No future outlook in terms of probably this is limiting the upside of further dividend announcement coming in for Vedanta because the vault has been drying out. But right now, it's seeming to be do well in trade. Also, in terms of the other life insurance companies that we can look at, there's also an upgrade coming in by CLSA, right? So something like an HDFC Life for that matter, Max Life Insurance, they're trading up. Okay, so that's a significant momentum coming out there, right? 2 to 3% gains coming in for HDFC Life. And if you talk about the Max Life Insurance Company, that's also something that needs to be watched out for, given that there is an upgrade coming in for Max Life also to buy rating from underperform, and the target is around 780 per share. So Max Life Insurance, that's another one that we need to keep on our list today. But clearly, at this point of time, the market momentum is positive. Rajesh, we were discussing about Vedanta, right? What do you make out of it, and what is the level now that can be expected?
So Vedanta is consolidating in a range of 270 to 295 since last couple of trading session. Now, after this recent recovery, stock is now negotiating with its 200-day moving average. So looking at the overall setup, until stock not crosses about 295 level, there won't be any major up move we can expect in the stock. So those who are already holding the position, they should have their stop loss at around 275. If it's break below 275, then further more downside we can see in the stock towards 265, even 260 also. So as of now, one can avoid at this moment because the stock is consolidating in very narrow range. So either side breakout will give the major move in this at this current juncture. So either wait for 295 breakout to initiate long, or to short, you can wait for 275 level to break and then you can initiate short. At this moment, it's avoid.
All right, it's an avoid coming in for Rajesh. But what about the life insurance companies, Rajesh? Something like an HDFC Life and Max Life Insurance, how are they stacking up on charts?
Yeah, HDFC Life is looking positive. Stock has shown good buying interest in the previous trading session also. And the previous day move clearly indicating that, stock can continue further more up move from the current level also. Looking at the overall setup, we believe that if stocks continues to hold above 485 level, then possibly next target for the stock could be around 525 to 530 level, as the stock is now trading above its 20-day moving average. So after a down move, now there is a sign of reversal we are seeing in this stock. So at this moment, one can hold the position with stop loss of 485 and upside target is 525 to 530.
All right, Rajesh, we'll leave it at that. Thank you so much for taking out the time and speaking to us this morning. All right, that part of the show where we address the fundamental story of the day, and to join us and talk about the fundamentals, especially given the kind of situation that we're sitting in, we talk about FOMC, a meeting that is expected to be concluded and the macro scenario. All of that and more, we're joined in by Mayuresh Joshi, who's head of equity research, William O'Neill Company. Good morning out there.
Morning, Nickey. Pleasure to you on your show as always.
Pleasure is all ours. But let's talk about the FII's trends. Do you think a certain amount of exhaustion out there? 8 consecutive sessions now, FIIs have been sellers. Well, the trend is not really different from what has been being noticed for the last couple of years. But with probably the rate hike coming through by Fed, the consensus is building an estimate of around 25 basis point. If that comes through, do you think markets can correct further?
So, Nickey, I think on the consensus part of a 25 bips hike by the Fed, I think that's absolutely gestated. both by the equity as well as the bond markets. So to that extent, the commentary is going to be extremely critical and important on what the Fed probably delivers if a 25 bips hike has to happen. I think the eyes are more in terms of the contagion risks that the US banking system has and the kind of infusion that the Fed has promised to uninsured depositors. So I think commentary is going to be key. A large expectation of the market is that because of the contagion risks that the banking system poses, the commentary will be dovish to a large extent, looking at data points. And that is what the markets will take respite from. So yeah, I think if it moves on these lines, I think the kind of shorts that are there in the system at this juncture can get covered quite significantly.
And what do you make out of the overall banking situation right now? How are you looking at that pack right now? Do you think there is more, because the Indian system right now, at least the banking system remains well regulated and well insulated. With any of the price hikes coming through or lack of thereof, you think there will be a significant impact on the rate sensitive as well?
So to that extent, you're absolutely right. I think it's absolutely well regulated, and RBI has done a commendable job over the last few years, including the more stressful years when COVID was around. The banking system has cleaned up a lot of the mess that it had on its balance sheets. If you probably look at the net NPA ratio for the system as a whole has come below 4%. Both private and public have done exceedingly well in terms of upping their provisioning as well. And therefore, if you probably look at the overall balance sheet strength of a large part of the Indian banks are quite well capitalized to a certain extent, the larger ones, and well provisioned for the system as a whole. Having said that, I think the kind of rate hikes that RBI is taking as well, core inflation remaining above 6% coming down as we speak. The outside risk, Nickey, remains in terms of the El Nino effect, the heat wave that we've probably seen can have some element in terms of food inflation probably moving higher. And therefore, looking at data points which are coming in is going to be extremely critical. Also, matching the gap between the US 10 and the Indian 10-year is going to be critical to manage the FDI flows, both that are there in the country at this point of time and newer ones that come in. So I think it's a fine balancing act that has to be done. No contagion risk that I see for the system as a whole. But yes, I think the price damage because of global factors has been significant. For the rate sensitives in particular that you ask, I think a lot of rate sensitives, specifically, I think the real estate sector that is clearly pegged with how the interest rate scenario is expected to play out. And the large expectation and large parts of the expectation is that it will remain on these higher sides, at least for the remainder of this year. A lot of fence sitters are probably looking at buying new properties or fresh mortgages might just get off the books, looking at how the rate increases have happened and increasing EMIs as well. Similarly, a similar functionality in terms of NBFCs, where personal loans might move significantly higher. Specifically, the unsecured part as well is where the large part of the market needs to be extremely careful about. So yes, I think some parts of the market which are extremely rate sensitive can feel the pinch as well.
Sure. Mayuresh, let's also chat about overall, what do you make out of the life insurance companies? Because they've seen significant amount of correction right from the day of the budget announcement, right? Where the big ticket size was probably bought in the ambit. They've corrected around 7 to 25% right since the time of budget. And today we had CLSA report coming in and giving an upgrade coming in for HDFC Life as also Max Life. What do you make out of this overall space? How attractive does that look for you?
So to a large extent, Nickey, this space has underperformed over the last few quarters. With the budget announcements, HDFC Life, Max Life will obviously feel the pinch when it comes to their top line and correspondingly on their bottom line as well. A lot of companies, including the like of LIC, and obviously I think the newer private companies are trying to have digital forays that can reduce their costs quite significantly. But if you look at the general trend for the life insurance players, the new business premiums have showed a significant amount of slowdown. What you've probably seen in terms of new business premiums that have probably held up. A lot of the companies which are listed in the space have got a very strong parentage, whether it's ICICI, SBI, or HDFC as well, which probably means that the bank assurance that they've got gives them the flexibility to have their products spread across the length and breadth of the country. In terms of the product mix itself, I think it's very, very critical for these players because I think the protection mix and the non-participating mix is a key driver in terms of the value of new business margins, which have held up pretty well. The overall operating costs, including commission ratios, are relatively higher for HDFC Life, ICICI Group, and relatively benign for a stock like SBI Life, which is around 8 to 9%. Also, SBI Life has the flexibility in terms of higher provisioning that it has done. And therefore, any reversals that happen because COVID is largely behind us can add significantly to the bottom line. But the bottom line remains the same, Nickey. I think new business premium is showing signs of not a significant amount of growth. They will have to invest in digital offerings. They will have to probably have much more in terms of the product mix as well. And that will probably take time in terms of both the expense ratios on their balance sheet and to probably garner more in terms of new business premium in the next few quarters. So yes, I think most negatives priced in, but I think it will still remain an underperforming sector in my opinion.
All right, underperformance sector rating coming in for a life insurance company. That's quite a different view out there. But let's chat about auto. There are different data points emerging per se for the auto sector. A significant uptrend that we've seen thus far, but in today's report we saw M&M, actually it's a Mint exclusive report which says that M&M is now looking to raise around 1.3 billion for a new EV company. Now that's something that I think remains to be seen. And also in other development, we had Tata Motors coming up and saying that they're going to be implementing a price hike from the 1st April to an extent of 5% for the commercial vehicle segment. What do you make out of this, and how is the sector looking right now to you?
So for the sector as a whole, I think commercial vehicles have held out pretty well. Now, with the kind of announcements that you've seen specifically in terms of infrastructure, road development, rural roads, last mile connectivity, so on and so forth, I think the activity both in terms of medium and heavy vehicles as well as the light commercial vehicles has seen a significant amount of stability, and that should probably continue. When it comes to the PV space as a whole, I think the SUV part of the segment has held up pretty well, Nickey. And therefore, I think if you're probably looking at what can be a laggard for this segment as a whole, again, I think we are coming back to the El Nino argument. If that does play out, a lot of these farm equipment players, tractors as an example, harvesters as an example, tillers as an example, can see stickiness come through for the best part of the season, which is Q1 in the next financial year. So I think to a large extent, M&M's portfolio is shielded both in terms of their SUV portfolio, but the tractor portfolio can come under pressure if these conditions turn out to be true. For stocks like Tata Motors and Ashok Leyland, the commercial part has held up pretty well. Yes, it has indicated price hikes, but that was mandated because of the commodity cost pressures that are probably being witnessed at this point of time. And therefore, that can get gestated in terms of the overall arguments in favor of commercial vehicles as well. On the two-wheeler space, again, I think very interesting to see that TVS Motor has probably outperformed its peers. Margin performance around 10% expected to hold around those levels, introducing more models between that 250 to 350 cc range, which has huge gaps. And therefore, the pricing part becomes extremely important. But this has probably become one of the key drivers in terms of earnings growth because they've managed to do that pretty well. When it comes to the auto Ank universe as a whole, lot more is happening in terms of the EV infrastructure itself. And therefore, I think a lot of players who have the first mover advantage within the auto Ank space, providing to both the OEMs and probably to the replacement markets going forward, what we've seen so far can be expected to do well. Auto Ank as a space can do well. I think the worst in terms of all issues, including the semiconductor related largely.
All right, Mayuresh, did I get that right when you say that you expect the El Nino impact to be more pronounced for FMCG, for auto as compared to that of FMCG? Because I think there is no proxy when it comes to the volume picture for El Nino, right? Have I got that right?
Oh, yes, to a certain extent, yes. I think a little bit of the rural-facing sectors will feel the pinch if this turns out to be true. And therefore, I think tractors, farm equipment players will feel the pinch. FMCG companies might also feel the pinch because what really happens is as discretionary spending starts coming down, your higher or your middle ticket items, the consumption pattern starts slowing down. So I think it needs to be seen, I think, how this entire El Nino aspect is.
All right, Mayuresh, so thank you so much for that. And I think we're just going to leave it at that. Thank you so much for taking out the time and speaking to us this morning.
Thank you so much, Nickey. Pleasure's all.
All right, with this, it's a wrap and a goodbye from entire team who puts this piece together. Thank you so much for watching. Please do post your feedback for us in the comment section below. Follow us on the link at the bottom of your screen for rest of the updates. Stay tuned in to moneycontrol.com and Moneycontrol app.